Hello everyone and welcome to January 2026 and our Portfolio Monitoring Service news update. I hope your new year started as well as mine. So it's always this time of year that brings our latest review on the portfolios and reflecting on the evolving global markets, the landscape, lots of geopolitical issues. We've continued to draw insights from leading industry specialists, maintain close relationships with them, and our focus remains on navigating these complex dynamics. A lot of news, headlines, stories, what's going on, what do we do with our portfolio? And no doubt all of you have seen just record-breaking performance over the last 10 months or so. We had a big drop in March last year, at the end of March, and there was fear everywhere, and now it's the complete opposite. So what are some of the key stories that are going on? The autumn budget we had for 25, Chancellor Rachel Reeves outlined a cautious approach as we head into 2026. There was an announcement made, but I just wonder if you picked up in between your Christmas shopping on the 23rd of December, the U-turn on farms, inheritance tax and business property relief. If you didn't, our newsletter is going out imminently. What else? We've got extra rules on ISAs, the limits that you can make and put in there. So watch out for those. And also, we had on the 1st of December an increase in the Financial Services Compensation Scheme. Quite a significant increase from 85,000 up to 120,000. Who else? Mr. Trumpy Trump, I think that's what we all call him now. He continues to make headlines with his influence on domestic policies, international relations, and it's too early to know the full impact of what's going to happen with his actions, but everyone's watching and world leaders alike. Iran tensions, continue to rise in Iran, and we'll see what developments might make there. So plenty of news stories. Someone told me today that Mr. Trump, got a badge or something today. He was given it. So what we like to do is actually stick with the facts and stick with a tried and tested and disciplined and structured approach to the investments whilst all this world noise takes its own shape and direction. So what do we focus on? First thing is cash and money market yields. So we track these. We've got a lot of tracking things in our database. The yield you'd expect to receive on cash in July last year was 3.6%. The yield now is 3.74%. So not much of a change there. Cash does have very small margins of change anyway. It's slightly increased over 6 months. Bank of England base rate is now at 3.75. That's 3.75. You could tie your money up on a fixed year 1 year fixed rate. The best one is 4.11 with Aldermore. And for those who use the Quilter hub or the Quilter website, then they have got a cash hub area, which just makes cash savings and the whole cash thing a lot easier when you've got it on the app. And the best rate for 1 year there is 4%. So 0.11 less. Is it that important when you've got, sort of a lot more convenience? Inflation, what's happening with that one? Well, it rose 3.2% year on year as of November 25, which is a decrease of 3.6, which was October 25. Fixed interest yield, 4.95, and December is now 5.4. So we've got quite a rise on the fixed interest area. What else? Most of our clients, we could put them into two camps. One where they're saving for retirement and they're kind of pre-retirement. Then we've got those people going into retirement and actually living from their investments and savings. We take an insight from Willis Towers Watson in terms of asset allocation. We've made modifications to that because there's a very high amount allocated to cash on the low-risk portfolios. Please see on our newsletter on further details of that, but slight modification, reducing the amount of money going into cash and putting that into fixed interest instead. The performance, we've said, it's just gone wild really over the last 10 months. In for risk 3, a 1-year performance 8.69. It was just, sky high for a low risk portfolio. Risk 10, 19.98. A lot of people are saying, well, is it gonna carry on? We're gonna see this. We're waiting for another dip. There will be another dip. Of course there will. It's just the way the world is. It goes up, it goes down. All the investments, all the portfolios, low risk, medium risk, high risk, all the boats go out and they all come back. But the big thing is, when your boat is out in the water and out in the sea, if you're on a high risk, don't jump out the boat when it's in the middle of the sea. Don't jump out in the middle of a ride. It is suicide. It's financial suicide. You will lose a lot of wealth doing that. Wait until the boat comes back on shore and then switch to a lower portfolio. If you want help with that, just give us a call. Give us an email, you know where we are. We had a very successful strategy with somebody last year in 2025. The market was down. They wanted to increase their risk. They went, oh no, I'm not doing that. So I said, well, hang on a minute, look at the numbers. We looked at the numbers and they said, yeah, you're right. It was the time to go up a risk level. So they've done remarkably well with that rise market over the year. The reverse has been true as well. Those people who didn't take advantage of maybe investing cash into the market have lost out on some upside. What are the constraints? What are the things that are happening at the moment? Well, if we look at the bank, you used to be able to put an investment into the bank, and if you wanted access to your money, you'd have maybe 3 months interest and loss of interest if you took your money out. Now, if you're tied up for a year, you just can't get the money at all. Well, they've said, no, we'll give you a penalty. So, first time that they actually penalise you for getting the money out of the bank. You go travelling, there's no currency, you don't do currency exchange, you go elsewhere for those sort of things, so they're losing that market. Credit cards, everyone talks about credit cards and the interest on that, 26, 27%, but overdrafts are even worse than that. So that's really where they're stinging everybody, stinging people with penalties for taking your money out of cash. Cash is not for anything other than grab money for easy access. It's not for best return. If you want best return, you've got to take more risk. You've got to have a well-constructed portfolio, a well-designed portfolio that will weather all the storms, surprises, ups and downs. And that really has been true since 2008, and it still is, and we're at 2026. We're just years and years on, 18 years. What else? Fund variations. Well, things do change quite a lot, and we track those too. So the things that we've tracked since July 25, we've had fund mergers of Saracen. We've had a name objective change on an emerging market fund. We've had name changes on FTF Martin Currie. We've had a merger of FTF Martin Currie. We've had a conversion. We've had another objective change. We've had another merger and 2 more objective changes. So nothing went on suspension in this 6-month period, but we did have one on the previous round. So in summary, if you're looking to outpace inflation, then you've really got to look at something that is not just for a year, for a longer term, because you'll never time that. So get your money into a very strong investor portfolio. If you want best fixed rate for a year on cash, we're looking at 4.11. And consumer behaviour, your behaviour, when the boats go out, if you're going to make an investment into a portfolio, just stick with it. Stick with that programme. Wait until you've got some return. The boats will come back, and then switch your risk level if it's too high for you or too low. Just make a logical, sensible review of the information before you make those changes. Record highs on the market, FTSE 100. I remember the days when 7,000 points, and it's not that long ago, was really questionable as to are we ever going to get to 7,000? Then we went over 7,000, we went over 8,000, over 9, and we're now 10,151. Tuesday, the 6th of January. Unbelievable. What's driving that? There's loads of M&As, mergers, acquisitions, corporates, valuations. Are they getting stronger? Are the businesses getting more profitable because they're more efficient than they were before? Are they getting more profitable because the use of not just AI, but systems? Go back to COVID, you go for a parcel, you go online and order something. You don't know if you're on the right website. You don't know if it's real. You don't know if you're getting scammed. I think people are a lot wiser to all that now. Perhaps there's a lot more strength within businesses, and that's driving up prices. But there's a lot of activity and a lot of positive things. Our portfolio whitelists are coming out very shortly, so watch out for those. And once again, thank you all for listening, taking some interest, and see you in July.